that is one thing that's actually really interesting about mortgage note investing is every note has a story, and you never really know how it's going to go. So
Mm-hmm.
you can sit there and pencil out with your projections, your fancy calculator or whatever it is, and
Right.
project your yield or your ROI, and it's going to be wrong. No matter what,
Mm-hmm.
it's going to be wrong. It might be better. It might turn out better than you thought.
From Adversity to Abundance, hosted by entrepreneur and seasoned real estate investor Jamie Bateman, is the ultimate guide for active and passive investors seeking clarity, mental fitness, and the confidence to make inspired decisions in the world of real estate. With a decade plus of investing experience across various niches and a background as a combat veteran, former Army officer, and multi-million-dollar mortgage note company owner, Jamie brings a wealth of knowledge and inspiring stories to each episode. Through weekly episodes featuring insightful interviews with industry leaders and solo explorations of mindset and strategy, listeners will uncover actionable advice and tips to overcome challenges and build lasting financial success. Whether you're a seasoned investor or just starting, From Adversity to Abundance is your roadmap to turning obstacles into opportunities and achieving financial freedom.
Hi, I'm Michelle Tack. I am the leader of Real Estate Pros podcast today, and I'd love to introduce Jamie Bateman. Hey, Jamie, just say hi to the folks.
Hello, folks. How are you doing? We're hoping to bring some value to you today.
Absolutely. One of the things that I really believe is a strength that Jamie brings as a subject matter expert is as a buyer of mortgage notes, running a fund that does that and the amount of work and effort that's in that area. So we're psyched to have you here, Jamie, to go through the good, the bad, and what's really exciting about what you do. So in terms of if no one knew about mortgage notes and how to, that area of the business, which a lot of people don't, as you had rightly said in our pre-podcast interview, can you tell me a little bit about, those people that are listening in a short summary of your world, what you do and what markets you serve?
Yeah, absolutely. And it does get into the weeds very quickly, so I'll try to keep it high level.
No, not a problem. Not a problem.
But a lot of people are, as you alluded to, unfamiliar with even what a mortgage note investor does. And so as a fund manager, there are three parts to running a fund. One is finding capital, raising money. The second is finding deals, which in our case is mortgage notes. And the third part is managing those two. With regard to being a mortgage note investor or buying mortgage notes like we do for our fund, essentially we're looking for, we are looking for previously originated mortgage notes. So existing mortgage notes, those tend to fall into two buckets. One is institutional, the other is seller financed or privately created notes. Mortgage notes, as most people are familiar, a mortgage is comes from a lender providing a loan to someone who wants to buy a house, or in some cases, an investor trying to buy a property. But that loan will be attached to the property via a lien. And so we focus on first lien mortgage notes. And so when we buy a first lien mortgage note, we do buy some seconds, we do buy land notes, we've bought some commercial paper as well. But for this discussion, first lien owner-occupied mortgage notes, that's what we focus on. We step into the shoes of the bank, essentially, if it was a bank that originated this loan. And it could be in default or it could be performing. So it could be performing, reperforming, or non-performing. But we step into the shoes of the bank. We are not a bank. We're not a lender if we're not originating the loan. We're actually an investor, a mortgage note investor. And so we buy that debt. And so the way to think of it is...
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
We don't own the property. We're not dealing with tenants, toilets, and trash, but we are dealing with the paper. And so it's kind of if you did a Venn diagram with, the property in one circle and then kind of like finance or in the other circle, we're kind of in that middle. So am I a real estate investor? Yes, I like to think so. I also do rental property investing. But am I in finance? Yes, I think so as well. So It's kind of a blend between, the financial world as well as the real estate world. So we step into the shoes of the bank or the lender, we buy that debt, and now that borrower is required to send us those payments that are due. We can get into different aspects of that, why people sell loans and that kind of thing.
But that's a great explanation. I really appreciate that.
Sure.
One of the things that impressed me and you wanted to stress was, obviously you understand the entire milestones that have to occur from looking for that note and have the operational piece run smoothly. Can you talk about your knowledge, because you've been doing this for a while, how you're able to make it a successful business from a operational side of the steps that you go through?
Yeah, I mean, I started out being a little bit more passive than I am now. I started doing some joint ventures with people. There are different ways to get into this space. If you're not instantly looking to run a mortgage note fund, but some of the really everything falls into one of those three buckets: is finding capital, finding notes, and managing the notes and the capital. And so a lot of how we spend our time, quite honestly, is asset management. And so when we buy defaulted notes, for example, there's a lot to manage with regard to running the operations of the business. And so a large part of those operations are focused on asset management. So for example, my fund currently owns 39 mortgage notes. Well, 7 or 8 of those are are beyond 90 days delinquent. So we've got 5 or 6 active foreclosures going on, one REO, probably 7 or 8 that are in bankruptcy. And so there's a lot with regard to managing bankruptcy, trustees, attorneys, communicating with your loan servicer, making sure that things are moving forward, because ultimately we're the ones that own the notes and nobody cares about them more than we do. So there's a lot with regard to asset management that people that people often underestimate with regard to the effort and time that it takes to run this business. Now, to be clear, you can buy a couple of performing first lien mortgage notes and spend 30 minutes a week and make some cash flow for sure. It's not one or the other. There's a kind of a spectrum with regard to how active you want to be in this business. But that gives you a little bit of insight into what it takes to kind of be an active mortgage note investor.
Now, and that was a very detailed explanation, which I appreciate, and I think the team will. Now, every operator always has some challenges, right? I mean, I don't care what type of company you run. Obviously, we're talking about real estate and real estate affiliated businesses, but can you give, for the purposes of, what you may have learned through this process, what have you, of a recent deal that you were dealing with, like within the last year, maybe, if you have one, that started to go south, but you were able to pivot really quick. You did something quickly. Or maybe it wasn't even quick, but something that you pulled out to try to save that deal. And it could be a deal, it could be a relationship. It doesn't have to be necessarily the function of finding that mortgage note and capitalizing on that.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency. It's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
Yeah, I mean, you're absolutely right. There's being an entrepreneur, being an investor, an active investor. That's all you're dealing with is problems.
Right,
And I mean,
right.
I don't mean to be negative, but that's what it is. You're
Yep.
solving problems and challenges, and so we have, numerous challenges every day with regard to both raising capital and finding notes, and then also managing those. So that is one thing that's actually really interesting about mortgage note investing is every note has a story, and you never really know how it's going to go. So you can sit there and pencil out with your projections, your fancy calculator or whatever it is, and
Right.
project your yield or your ROI, and it's going to be wrong no matter what. It's going to be wrong. It might be better. It might turn out better than you thought, but
Right.
And so, but what you can't really predict, is how the borrower is going to cooperate. And then one of the biggest, hurdles you have in this space, particularly with owner-occupied mortgage note investing, is we are not able to get inside the property. So, that can be a huge surprise when you finally get inside the property. We do buy some loans that are on vacant properties. Those are a little bit different, but in general, the loans we buy, these are owner-occupied notes. So you're not able to get in and do a full interior appraisal and, or BPO and get a property value estimate, right? So that's really where we've lost money on deals before, is from undervaluing the property. Man, there's
That's
so many.
interesting.
They're always
That's interesting.
Yeah.
Yeah.
Yeah, there are always surprises with this. I've got tons of case studies and stories. I mean, we had a borrower who was paying through bankruptcy, and he passed away in September. And and then what navigating kind of the human element of this it can be really tricky, and that's one reason that I keep a distance. I'll use third-party vendors, like a loan servicer, for example, to deal with the communications with the borrower. So in this case, this person passed away, and we're left with the option of pursuing foreclosure. And so what you have to do is get a relief from stay, and then his spouse is currently in the house, and she legally doesn't have any right to be there at this point. So navigating that, where I'm not trying to kick her out on the street, obviously. So, but at the same time, if we don't kind of give her notice to vacate, we're waiving a lot of our own rights and not protecting our investor capital. So there's a balance there of making money and also being a good person. So we're actively navigating that, and I'm working with a real estate agent who I think has some good people skills to be able to kind of work with her. And it's not just numbers on a spreadsheet with mortgage note investing. There's the human element, specifically with regard to the borrower. Another quick example, and this is not resolved yet either. I had a hard money loan that I purchased. It's gone terribly wrong, quite honestly. But what protects us in this case is there's a buyback clause in the contract. So when we bought this note, there's actually a buyback clause. And so, unfortunately, fortunately that clause was there, but unfortunately we're having to pursue that legally to enforce the note seller to buy this loan back. And so there's, you never know how a case is going to go. You never know what the story is going to be with a particular mortgage note. But if you buy correctly, even if it goes through the property, through the borrower, or even through the note seller, those are kind of the main exits, really, or you could sell the note. If you buy correctly, you can make some missteps here and there with asset management, or but if you buy correctly, you have options. I guess that's really what I want to get to, is then you can pull out whichever tool you need for the situation.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
That's awesome. I have two last questions for you. Can you talk about your next goals, where you're trying to take the business over the next year?
Sure.
Obviously, short term, maybe the next 6 months, but then longer term as well.
Yeah. So we have a fund. It's called the Integrity Income Fund. It's for accredited investors who want to earn a passive return. We pay monthly distributions. We've had the fund for 4 years. We've never missed a distribution. I'm actively trying to raise more capital for that fund to serve more investors and provide a stable source of income for investors. We're trying to get that fund beyond $3 million. Currently has about $1.5 million, and it's a 506c. We can talk about it, and it's public. I can advertise and everything. So that's
Right.
where we're trying to go with regard to the Integrity Income Fund. One thing that we're actively pursuing now is pivoting a little bit, not a 180, but pivoting somewhat to start originating more notes. This may just quickly also answer your prior question, a way we were able to solve a problem. And it speaks to what we're trying to get into more in the future as well. We took back a property through a reverse mortgage. It was vacant. The property ended up being much lower in value than I had anticipated, and that what the prior BPO had showed. So this was a property in Tennessee. Finally take it back through foreclosure. It was a deceased borrower. We didn't kick anyone out of their home or anything. And we got the property back, and it was very in much worse condition than we had anticipated, and the property value was much lower. Well, we were able to find a good borrower/buyer with a credit score of over 800, and we did seller financing to that person, and he's already made a couple payments, and so things are going well with that. I thought that could be pretty not a disaster, but it was not looking good.
Yep.
I'm not going to say it was a home run, but we were able to navigate that situation by, instead of just listing this property for sale to an investor, we sold it on terms to someone who's going to fix it up and live in it, and he has a personal interest in living in this property. So we were able to find that person through networking and other ways. And it looks to be a good, solid performing loan with a high interest rate and a very qualified borrower. To your point, your question, I'm trying to originate more loans and get into a little bit more private lending. Not fully, but that's an option within our fund. So instead of just buying existing debt, also originating more loans.
Yep.
And I think from my perspective, from my experience, I've got the ability to understand what a good mortgage note looks like from a buyer's perspective, a note buyer's perspective. And a lot of loan originators never even think about, what if I need to sell this loan? What does a note buyer look for? And those two worlds are often separated completely. The note originators and the note buyers, they don't even speak to each other in many cases. So I'm trying to originate more paper that may be attractive to sell to a note buyer.
Yeah, what you talked about was very important, right? The level of detail that is not, as we talked about previous to the podcast, knowledge that isn't out there. You're really in a niche play, and you're doing sort of both sides of the coin there. And, I think, and I hope the folks on the podcast really understand how important that is, that subject matter expertise. The other thing which will lead into my last question, I think is really, evident from the conversation with you, is the prioritization of your people skills and your ability to work with people, because given, someone having passed away, to be able to be deft at that is not an easy skill. That takes some time. We develop that over a lifetime, quite frankly. But
I don't think we're ever done with that,
exactly.
right? Developing that skill.
Right. So the last part of that goes into that is, tell me a little bit about your networking. And often that is undervalued.
Yeah.
And I mean real networking, not like I'm posting on LinkedIn every day.
Right.
Network that you continually go back to, that's feeding you, and maybe, things that you want to aspire to in your network.
Right. This is a great question. And I do think I have a small team that helps me with marketing and things. We do lots of social media. I've got my own podcast. It's called From Adversity to Abundance. And we do a lot of posting, a lot of, email marketing and things. And it's important, and branding is important, and people will Google you and check you out online, and they should, but it's not enough. And honestly, it's one of the areas, networking intentionally is one of the areas I've probably, there's room for improvement. I certainly have a strong network and various, from various, aspects of my life. We talked a little bit about pickleball before we hit record here. And that's an area that's grown in my own, as far as my own network goes. But I had lunch last week with an older gentleman who has done hard money lending for the last many years, and he's done quite well with it in the Baltimore area where I am. He reached out to me, but I immediately said yes, and I realized I need to be doing more of this. And so one of the other ways I'm working on just kind of developing my network is working with our investors in our fund and having direct one-on-one, more direct calls with them one-on-one, and asking them, what are we doing well? What can we improve upon?
Idea.
Who else do you know in your network that might be interested in investing in our fund and receiving, monthly distributions? So I have a network, and a pretty, I think, quality network. I do think there's room for improvement with regard to being more intentional in developing that network, not just with the approach of what can I get, but also what can I give. And I do value adding value to people. I just think I personally could be a little bit more active in developing that network and intentionally just looking for opportunities to add value. So yeah, lots of different areas of my own, I guess lots of different sub networks, if you will. I've got the social pickleball network, and then, my college network from my athletic days. And then, the real estate investor network. And I know we're probably almost out of time here, but I am intentional about setting up. I'm a part of a couple of different informal mastermind groups. They're not paid or anything. It's just a group of people, peers who get together and want to share, lessons learned and help each other. A group of us just met in Orlando a couple of weeks ago, and just it was basically 24 hours of actual, work. Just one day where we kind of sat down and went through, each person was on the hot seat, and we went through and provided feedback. This is what I think, this is what I would do in your situation. This is what I think you're doing well. This is what you should focus on. But developing that peer network is huge in the mortgage note space. Most of the mortgage notes I've purchased and sold have been from fellow investors. And so that's from the network. It's not from an online site. It's not from walking into a branch of a bank and say, I want to buy some mortgage notes. It doesn't work that way.
Exactly. Well, look, you've been great. We really appreciate all of your insight, and I really want to thank you for being on our podcast. For those that are listening and find value from this podcast, please ensure to continue to subscribe to our podcasting subscription model. There's a lot of great content there. And again, Jamie, thank you so much, and best wishes for continued success.
I appreciate it, Michelle. If anyone wants to reach out, LabradorLending.com is where to find me.
Thank you for joining us on From Adversity to Abundance. We hope today's episode has equipped you with valuable insights and practical advice to elevate your real estate journey. For more inspiring stories and resources, visit us at www.adversitytoabundance.com. If this episode has inspired you, please share it with a friend who could also benefit from our conversation. Together, let's turn adversity into abundance. Until next time, keep building your mental fitness and your real estate empire.